Hello, guys. Welcome to a Train Parrot. Today is Monday, and I'm very excited today because we're going to have a very special live stream. I have invited Keith Allen from Material Indicators. I met him via Twitter, sharing charts about liquidity, and we started having some discussions. We found that we are very alike in terms of analyzing the market, and I invited him to the channel so we can have some conversation on what's going on the weekly time frame, on the monthly time frame, daily time frame on Bitcoin. Very interesting times. We are about to see what's going to happen now with the all-time high. We are right below the all-time high, so there's a moment of do it or break it, and I'm very interested as well to see different opinion and try to contrast from different angles how we can cover the market. So without further ado, let me bring in to Keith. How are you today, Keith? Can you hear me well?
Hey, how are you?
I'm very good, very excited to have you. I mean, for me, I love really your work on Twitter. I've been following you with all the things that you do with material indicators. At first, I was really impressed when I started seeing that it actually works, looking at the liquidity, looking at all those buckets that FAR charts provides as well.
Well, I appreciate that, and I appreciate the opportunity to collaborate with you. This should be fun. We're kind of uh, moving into uncharted waters here. So I know that you and I both have different perspectives and use different tools. So I'm looking forward to hearing and learning what you're looking at, and
Yeah,
hopefully we can help people paint a different picture by showing them some different perspectives and help
yeah.
help paint a clearer picture of what's happening in the market and maybe figure out what's to come.
Yeah, hopefully. And so, for all the people that are joining currently, thank you so much for joining. And if you could just give a like and continue commenting as much as you can, you are at home. This is your space. So, if you have any questions, we are going to go through all your questions. No question is going to be ignored. And before we start, let me show you a little bit what charts I have prepared. I know Keith has a lot of material as well that we're going to try to be ping ponging ideas in terms of what's going to happen with Bitcoin in the upcoming months. We are 32 days waiting for the halving. That's going to be super exciting. There's going to be a debate whether there's going to be a dump before the halving as it has happened in previous performance. Of course, previous performance is just that, but let's see what we have to say. The first chart that I'm going to cover is this one here. I also wanted to cover the bull market support band that is indicating a specific number I have in mind, 48K. Prior to going live, we started talking with Keith about the number 48K. So let me know in the comments, what do you think? Is 48K completely out of the table? Is just too crazy to think with the ETF demand? Or are you also part of the team that thinks that that is still doable? I'm going to cover just from different angles liquidity, and we're going to look as well at this particular chart that I haven't covered in a long time that forecasts the top of the market. So I'm going to give you what could be the top of the market based on volatility on the monthly time frame. And we can see very clearly how every single peak we are going lower and lower is diminishing as well. And I'm also going to cover this one that I haven't bring into the channel in a while, the RSI heat map on all the altcoins. But before I overwhelm you with too many tabs and too many things, I wanted to get your general perspective, Keith. What do you think is next based on what preference of indicator is driving your bias currently?
Well, we of course saw a bit of a flush over the weekend, and I think that that was really anchored by what started things in this downtrend is Thursday we had some less than stellar economic numbers. The PPI came in a little bit hot. We started to see some selling
Mhm.
across both crypto and TradFi markets. and that continued. Now, on Thursday and Friday, we also saw a below average number of net inflows for that BTC ETF, and I think that that has obviously been a driving force since really late December, Christmas time for sure. We really saw the buying start to amp up towards that January approval date, and a lot of us viewed that as a buy the rumor, sell the news event. Uh,
Hmm.
but I don't think a lot of us really understood what was going to drive that sell the news event. And what turned out driving it was the fact that Grayscale had listed a super high fee on their holders versus what the other ETFs were doing. They're charging 1.5%, where all the others that were approved are in the 0 to maybe a quarter point or half a point at max. I think quarter point is actually the top number right now among the rest of them. But Grayscale is in a different situation because they had so many holders that were ported over from the former Grayscale Bitcoin Trust that had coins locked up since the FTX crash. So
Yeah.
they started to once they released those coins, they saw a tremendous number of outflows that drove that dip. And then obviously we started to see the momentum building amongst the others, and that momentum continues. What we're learning here in the past week or so is even though those inflows the demand is still there, and the having narrative still exists, it doesn't mean up only is a thing, right? Up only, in my opinion, is a crypto Twitter farce. Okay, and when you get trapped into believing that that's a thing, is when you get in trouble. Now,
I agree.
if you zoom all the way out, the long-term view for Bitcoin is very good. I think it's as bullish as it could be. That said, that doesn't mean we can't have a 20, 30, 40% correction at any time. And I saw over the weekend where somebody had posted, why would anybody sell as we were dipping 12% over the weekend.
Yeah.
Somebody posted, who would be selling a month out from the halving? Well, the people who have actually looked at history and seen the
Yeah.
kinds of corrections that we've seen in history with these prior halvings. And if I could share a chart, I can show you that we have quite the history of that happening, both before and after halvings. If you date it all the way back to the early days of Bitcoin, can you imagine double-digit Bitcoin right now? Okay, that's a dream.
That's
That's a
scary.
dream. But and you could say, all right, we're in a different world from then. So sure, we are. But here's a 57% dump and a 26% dump leading up to that halving, leveled off, moved up. We had a fantastic market from there. This again was before I got into Bitcoin. This is still pre 2016, 17, and that was triple digit Bitcoin, which was exciting. I entered the market in the in a later era, 2017.
Hmm.
But you can see coming up to that bull run in 2016, same thing. And I'll zoom out, 30% dump right here, another 15% dump right here, and
Yeah.
even after the halving, you could have something similar. Right here was the high off of the after the halving, and that was a 30% dump, more than 30% dump right after the halving.
Yeah.
Let's fast forward. Okay, this was this was where I entered the market as a novice trader, and I hadn't heard of Up Only, but this seemed a lot like Up Only at that time. And we were thinking, oh my gosh, we're going to 20K, come in here at like 6K and we'll go up to 20K in a matter of months. Thought this was going to be amazing. And this is where I went to school. This was the education. This was more education. And just when
Yeah.
I thought I knew what I was talking about, I learned a little bit more here. This is the school of hard knocks. Um,
Where
but
where were you still holding around there, or you already run
so,
away?
so no, at this point, I had clients that were paying me in Bitcoin, and uh, so I was holding a little bit as we went lower. I mean, I I was just telling you, I was I was in trading, back in these days. I don't know when you started trading crypto, but back in these days, if you wanted to trade alts, you had to be on, 5 or 6 different exchanges.
Yeah.
And, I had always used the mothership as Coinbase as my on and off ramp. And I was over on Binance, but even this was kind of early at that point. Um, so I was on a number of exchanges, including Cryptopia, which is where one of my clients was trading their coins, and so they were paying us to our Cryptopia accounts. And I actually have some Bitcoin at this level, at 38 at the 3,800 level, um, that is still in that Cryptopia account, and I'm hoping to get that back sometime.
Yeah, crossing
So
fingers.
yeah, yeah. I mean, that would be I wrote it off at this point, right? But this is really where we got an education, and this is where we discovered Fred, who is now our partner at Material Indicators, um, because back at that time, my other business partner, Brad Nickel, had seen a tweet from Fred, who who was on Twitter or X. I call it Twix because it's still in between Twitter and X for me. But you can find him at material_scientist. Um, he he had posted some charts that said if they were using my tools, they wouldn't have gotten wrecked. Well, we took a deeper dive into what those tools were, and at this point, um, in late 2018, we had started working with him on just exactly what those tools were and testing different stuff with him. And we had a small community on Telegram,
Mhm.
and we just started trading with the MTF mean reversion indicator. We had trend precognition uh, indicators, and fire charts wasn't even born at this point yet. And so we really learned a lot. We tested for 2 years before we ever sold a single product. We just wanted to make sure that we were putting something out there that was working and people had confidence in, and that we had confidence in it. And
Yeah.
so we also started gathering a bunch of data at this point so we could validate kind of what we were doing, and rolled out fire charts, the first iteration of fire charts around this time. And
Around
um,
halving.
and that was a game changer for me, because now I could visualize where resistance and support were. And if we look at the newer version of fire charts 2.0, we can see you can visualize. And this is what I love about this tool, right? We have the order book data up top. These are all limit orders, and we
Are,
have
are
the
you
order.
showing a different tab?
Oh, it didn't switch. Share. Oh, it's asking me to share.
Oh, yeah.
Okay, there we go. So we see here all of the order book data as
Yeah.
limit orders, and all the order flow data binned as market orders. And this binning helps us identify, who's making the moves, right? What whales are doing. These are all binned by order size. The orange one is $100 to $1,000 orders. The green one, $1,000 to $10,000 orders, and so on. Purple, $100,000 to $1 million orders is really the dominant class. It's had the most influence over the price action over the years. Those brown ones, the brown mega whales, are certainly those are bigger orders, but they don't trade with the frequency that purple does. So purple is really the one
That
that I
drives. Yeah.
watch.
Yeah. Yeah.
But
Yeah.
that's the one I watch the most. Now that dynamic changes from time to time, and as we've seen around Christmas time, this red class, which I call sharks, came in very, very strong with what appears to me to be a TWAP strategy. You can see yellow or orange TWAPing out in distribution, and you can see red buying very, very strong literally since Christmas Day. And this has been since this time. If I switch it over here to absolute, this is a normalized view, which makes it easier to see. If I switch it over here to the absolute value, we can see how much
Wow.
money they've actually spent. And this tells a much
It's in
different
billions.
story, right? Billions. Okay. So they really ramped it up at Christmas time, right? So at on 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 December 24th, that class was net negative, we'll call it 200 million. Um, and since then are now up 3.5 billion. That's
Impressive.
3.5 billion
Ah,
in just incremental buys, and they can't do it in larger orders, of say 100,000 or $1 million or $1 million
mm,
plus orders because of the slippage. So this strategy is someone, whether it's one of the institutions that are, that own the ETF products, or whether it's a Michael Saylor, or whether it's El Salvador, or another sovereign nation, or just another large institution,
yeah.
somebody here believes that price is going up and that they want to own as much Bitcoin as possible.
And those are the ones that are destroying all my technical indicators, basically.
Well, they are, and a lot of technical indicators over the past 2 months have been invalidated. Right?
Yeah.
I've seen more invalidations, probably in the past
I mean,
at least month or so, than I've seen in a long time.
let me show you my screen. I have a few things I wanted to show.
Sure, let me release this.
And you should be able to see my RSI.
Hmm.
Yes, perfect. So there's a few things that are still standing. So if you start zooming out and you look at the weekly, at the monthly, it doesn't seem that much has changed. Of course, there are some new things that have never happened before. Like, for example, what are we doing on the weekly on the RSI above this yellow line before halving? Each of these vertical red lines is halving. We have never crossed above the yellow line before halving. That's something that is strictly reserved post halving for a first initial run, and then for the last blow of top. Like you can see here, two tops. Here we are three times above it. Here we are two times. And now, so far, we've been once above it, but with the caveat that is prior to halving. So we're running very fast, very quick, very high. And now, interestingly, what I'm seeing today, because today is Monday, so we are printing the beginning of the next weekly candle. And if you focus on this, you can see that we are coming now below that limit that I have set at 84. And that's, if you look at the full history of Bitcoin, you can see that we barely have been above this line, maybe 3% of the time, 2% of the time. It's restricted just uniquely to the most bullish times in Bitcoin history. And this is the first time that we do such a thing before halving, which is very bullish, true. But at the same time, it's creating some sort of anomaly, and it's creating some uncharted territory, because we don't know what happens necessarily after being above this prior to halving. Of course, yeah, people are gonna say everybody's bullish, so everybody's gonna say, yeah, this is supposed to continue here and push in this way. Well, who knows? Maybe we are gonna break below this trend line, cool down, visit 57, and disappoint some people. Maybe enough time for BlackRock to accumulate some cheap one. Maybe they dump on us and they reaccumulate here. That now that they start getting more power. Now, I don't remember what was the percentage of their current holding, but I believe that they have already surpassed a MicroStrategy in terms of holding. So they could easily, create some fear, some manipulation, or they could be forecasting that maybe there's an upcoming good time to sell some of that, create some fear, buy more cheap, and then carry on up, and then create the second top. You can be here at these levels multiple times during a bear market, during a bull market, and they can be spread away from each other over 200 days. So maybe this is one, and maybe in 200 days we go back about here, and we are at that point at 150k or at 200k. So I'm not bearish on Bitcoin, as you can see, but I just think that you don't stay in a weekly RSI above 84 very long, no matter ETF, no matter Wall Street, no matter anything. And at the same time, the liquidity is draining. You can see here that we are doing this divergence um, against the liquidity injected in China. And usually, the liquidity injected in China drives Bitcoin. Like every time there's liquidity in China and it grows, Bitcoin does a big move to the upside. You have four examples here: this one here, and the one we are now. And there's usually initially a divergence where liquidity is taken out and the price continues going higher. But that doesn't last very long. And that's why last week I sold all my Bitcoin. I just said, fine. If it continues running, I still have a heck of a lot of altcoins and Ethereum. But with Bitcoin, this is just no sense. It needs to cool down now.
So yeah, I agree. You know, we got a red candle close yesterday, and it was interesting. I was watching the close, and last week's the prior week's close was just above 69K. It was
Yeah.
like on Coinbase, I think it was at 69,069 something like that. Bitstamp was, in that range as well. Binance, however, did not close above the all-time high the prior week, which may have been a little bit telling, right?
Hmm.
Um, and so yesterday, obviously we had the flush on Saturday, and I bought that dip down around 65K, and because it was respecting the 21 day moving average. But yesterday, I started to see the rally come back. Right, it's pumping back up, which I expected to. I expected to see at least a challenge for the close, which it did, but it ran out of steam about the last, less than half hour or so prior. It got up. I think it got up to like 68.8 or 68.9 even, and didn't quite cross that level. So we got a red weekly close. We got a red trend precognition signal, which may or may not validate by the end of the week. We'll see. As you mentioned, some of these ETF pumps and that red T-whopping has really thrown some of the indicators for a loop. So we'll have to see how that plays out. But in the meantime, I look at liquidity, right? Because the indicators may not always be accurate. The liquidity in the order book does not lie. Now, it can rug pull from time to time, and you have to be aware and cautious of that. But I look to the technical levels that we see in the charts, and I look to uh, fire charts to see the liquidity, and where I find confluence between the two is where I have the most confidence. So,
Hmm.
with that
Yeah.
in mind, I do think that I agree with you that we're in a pullback. We had let me pop this one up here. I got a lot of screens going on here. Share the window. Okay. So I have, we had built this long-term cup and handle here that I had been watching develop, obviously for quite some time. It took it took years. It came from the top of the prior market to uh, the bottom here at the FTX crash, and worked its way.
Did you have the whole cap drawn bef- during the bear market as well, or you started
No,
drawing it
no,
after?
I drew this.
Because that will have been genius.
Yeah, yeah, sure I did. I started doing this really a few weeks ago before we got up to the all-time high. Zoomed out and I was like, "Oh my God, how have I not seen this?" Right? And so that, and I will, caution traders, especially new traders, when you're looking too narrow, you miss a lot of moves, right? So it's always good when you're done with your analysis. In my opinion, it's always good to zoom out and gain some perspective. I always find that helpful. And I was wondering, at this point, this is when we were seeing massive ETF inflows, 500 million, 600 million a day, right? Were we going to shoot right out the top, or were we going to actually get, this handle forming? And we did. I've gotten rid of all of my tools here. We did see, the formation of the handle where, price pulled back about 15%. We came back up and retested, had that initial breakout, and then came back down, and here we are now. What's going to happen? Well, do we move back up, or are we coming back down? And if we do come back down, where are we going to land?
Yeah, I mean, people are enjoying the ride. People are bullish, and they don't want to hear us, saying anything bearish. And I know that for a fact because on Friday I was bearish. In fact, on Friday I was selling my Bitcoin. Okay, as clear as that.
Well,
I'm
you were the
selling.
smart guy that sold at 73. Um, I don't learn so fast. Okay. So I waited until we failed yesterday, and I would have done better had I executed the way that you did, selling the tops. But I was looking for that confirmation. So I'm a little more conservative, and being more conservative does cost you a little bit in either direction. But I wanted that because I have a history of selling too early.
Oh,
Um,
me too. Yeah, me too.
I
I'm good for tops and bottoms. I'm not good for holding it all the way, like,
right.
particularly when it's a short. And you short and you are already in profit and you think, this has been really bullish so far, I'm gonna take profits,
Well,
and that was the top.
but you know what? I'm okay with that because profit is profit, and nobody ever got wrecked by taking profits. And so to me, capital preservation. Listen, I'm a work from home dad. I got teenage daughters. I got one going to college. If I was 25, sitting in my sitting here in my shorts and just trading and didn't
Yeah.
have a family to support, I'd probably take a lot more risk than I do. But I can't do that, right? I've got some priorities. So I do conservatively take profits so that I'm always paying myself. And that was a lesson I learned the hard way too. Back in those early days, 2017, 2018,
Hmm.
when you don't pay yourself uh, and you don't realize the profits that you had made, then you're not doing yourself a whole lot of good. Now, um, you had mentioned, if somebody doesn't want to hear the price is going to go down, listen, if you're just in this as a long-term investor, you're probably going to be okay, right? In the long term, depending on
Yeah.
what your time horizon is. But in the near term, if you're trying to trade or you're trying to improve your cost basis or you want to accumulate more to build your longer term position, you need to be strategic on how you do it. And that could be it could be a time weighted thing. It could be a TWAP thing like these guys are doing, right? If that's how you want to trade. Um, I'm not doing that. I'm using technical analysis to pick my levels, and I'm using our mean reversion indicator to help me buy those dips. And I've got a couple of different strategies that I use with this tool, and I would tell you that what's cool about it. I just set up a monster grid here. This is actually a bunch of iterations. Let me clear it out so it's easier to interpret here. But I just set this up anticipating a bigger dip. So I have bots now that will pick up those monster corrections if we get them. That would dip if price goes down. If we get just a flush wick that takes us down there, we'd get that. But I typically run this in a scalping scenario where I'm running anywhere between a half a point and a you know 5 or 6% deviation,
Hmm.
and that gets me signals. If you run it too deep, then you're not going to get any signals with it. So
Yeah.
I like that balance of getting signals. Now, I will tell you, I've been doing this obviously for months and months and months, and was and doing so with very small orders. Okay, so with a bot like this, you want to spread your risk across the entries. You could get some drawdown, and it's why I run deeper deviations along with it. But I was getting good entries on this, right? So over the past 2 weeks, in the grand scheme of things, as price was moving up, and I had a cost basis in the 30s. Um, I said to myself, "Oh man, it'd be great if I don't buy anything over 50K." And then, of course, price shot past 50K. So with the MTF bot, I was accumulating more at that range, and then I said, well, gosh, it'd be great if I didn't buy anything above 60K. And then price shot through 60K. So I did, I
Yeah,
did the same thing.
that's
And then
precisely what's going on. Yeah.
and then price, and then I said, well, I'm not going to buy anything above 70K. And my bot obviously picking up some orders above 70K. So I've now turned off those lower deviation bots, and I'm just running the deeper deviation bots uh, to do those buys incrementally.
Hmm.
But yesterday I sold everything, including what I purchased on the weekend on that dip to 65, which, as you can see, we picked it up here, right?
Yeah.
But I've sold all of that uh, because I expect more downside. And
So you're just swinging the trades. Yeah.
right, so if price can dip lower, and this was my this we're actually right at the cost basis of what I had sold yesterday. The block of Bitcoin I had sold, because I want to improve my cost basis on my longer term position. This was buying this had drug my cost basis up to the mid 40s range, and I felt like I could improve on that. So if we get a bigger dip here, anything below 67, if I buy below that, I'm improving on my longer term position from where I was from stuff I had accumulated over the past 2 weeks or so. So that's kind of how I'm playing that. In terms of liquidity, what I'm looking at now, oh, we have a nice new chunk of resistance that just showed up. 61 million just appeared right on top of us.
Wow. And it's pretty bright.
Yeah, so this is all scaled, okay? And you can adjust that scaling. You can adjust the scaling here, but
Mm.
when you on some, especially on lower liquidity coins or in periods where all the liquidity seems the same, it could be darker. Um, so you don't get the contrast. This chart looks great to me because we have a nice variation of bids and asks. So the brightest spot on the chart, white. This is why we name this fire charts, by the way,
Hmm.
because it's the color scheme of fire, right? And the hotter you
Precisely.
go, the white hot part of the flame is the hottest part. And so somebody's going to chime in and say blue, and I'm going to say, well, I got some choice words for you. We don't have blue in this scale, okay? So blue is price. So this literally just appeared, and if we zoom in on the daily, we can see it. All right, so this is what I was talking about. See that this everything else looks dark because this is offsetting it so much. And if I adjust the color scaling here, I can see that
Start bringing
I
in.
can
Yeah.
see that liquidity better. Um, this obviously feels like they're trying to push price
Yeah, and
lower.
they're chasing the price actually, because I can see that the white went
Mhm.
yellow at 70, and that means that some of that volume went lower to your.
Yes. So that's the other great part about this tool is you can adjust to see the subtleties of where, look up here up top of that 70K range where it was built up to 70, built up and then started to fade out a little bit. Some came down, and here's a case where this looks like it came right from up here. So this is pretty interesting. If this holds here, um, if it pushes price down, that'd be great. In my opinion, I'd be
What's the precise price of that new line?
so this line
67.5.
is this line. So these are binned in ranges. Okay. So this would be a range of say 67.5 to, yeah, I mean, that's right at the 67.5 range. It's based, it's a few
Interesting.
$100 here. Um,
So that could mean that my my expectation that we're gonna go to RSI 50 on the daily, and I'm gonna start talking about the price of that in a second. Let me share my screen.
yeah. So this is just to be more precision for you, 67 540 is the upside,
Yeah,
and 67 460
460.
is the
Okay,
downside to that.
let me see this one. So this is the chart I posted on Friday on the RSI, and my focus at that point was two things. first of all, the head and shoulders on the RSI. And people think I'm crazy looking at patterns on RSI, but many people do actually. In RSI, I follow many people that look into patterns on RSI. Think about the RSI as the price, but constrained and normalized within a range, like between 0 and 100. And but it's basically following what the price is doing, just constrained. And that helps me clear out the noise of the price and focus on just the momentum. And for example, you see here that I have a line of support that we held from 22nd of January. This was the last time that we were above it, and then we lost it around the 5th of March. The 5th of March, actually, many of my bots had a really tough time. I remember the 5th of March for alts was quite painful, and we broke it. So I say, okay, from now I'm bearish from now because we lost momentum, and but I had to hold my word for 1, 2, 3, 4, 5, almost 7 days that this thing was below support, and it came to retest at 79 RSI. That meant that the price kept going higher against my thesis, and I was bearish, and I was standing strong. I'm bearish. This is gonna collapse, and it touched that, and the momentum is preceding price action. So it goes there, retests my trend line, and at this day I was like, now I'm completely confident that from here it has to come back down, 90% or over probability. That's where I started convincing myself, yeah, it's a good time. It's a good time to sell. It's a good time to sell. And a few candles after, this is at daily. So you have to be 3 days here holding your thesis and still seeing the price slightly going higher. But then it lost this other secondary trend line support. The target was RSI 50. We still don't reach that. It's been for the lowest it's been like 53. So it's
So
going.
why is 50 your target? Why is RSI 50 your target?
Oh, interesting. So the Head and Shoulders has a technical target
Mhm.
that is widely
Okay, I
accepted,
see.
which is the high of the head. So I
Oh my
just
god.
moved this line
Your
here.
Head and Shoulders looks like Batman.
It's a Batman Head and Shoulders, which is even more scary to me.
That
Uh,
is that's the Dark Knight.
yeah, yeah.
Okay, I see it. I see
You
the
see
left
it.
shoulder. Yeah,
And
yeah.
also we kind of big made a big move here. So this for the RSI is very weird to see that in one line you cross almost
Right,
50 points of
right.
RSI.
I
I mean, you
I
can scroll back in time and you won't find so many straight lines like that. They
right.
are very rare. And when we did this, I thought, okay, remember the rule says the faster you move to the upside, once you get a pattern that says there's reversal, there's a high chance that that reversal can also be very fast. We still haven't had that fast. So this so far is a baby pullback. So I didn't win, my argument that this could be a top. I'm not convinced necessarily that this is going to be the top. There can be still another push up, and I'm happy with that, because what I'm saying here is not that this is the top. What I'm saying is this is the top of the momentum locally,
Right.
and that might mean that the price goes sideways, that there's some slight bearishness, and there can be another top, but we already lost momentum. And when
Right.
you lose momentum, it's kind of there's an expiry time for the price. So
So
if the price,
the other thing that you do that I really enjoy, and I'm trying to figure out, is you are able to match a price target to your RSI target. Can you can you climb into that?
yeah, sure. So I'm expecting now, because we lost momentum, price can do whatever. Price can go higher. Yeah, sure, fine. One more hit to the top to grab more liquidity, to trap more bulls into a momentum lost. The momentum is lost on the daily. We are clearly here now in a new channel to the downside. and my target is here 50. So the next step I usually do is I focus now back on the price, and there's an indicator called reverse RSI. So this one is paid, is part of the community, but there are many versions that are free on TradingView. You just need to look for reverse RSI. There's actually a paper that you can read from a mathematician that found a way to reverse it. And what you do is you put the value of the RSI here, and in the chart, you're going to see the line of what is the price that correspond to that RSI. Of course, the price is moving, the RSI is moving, so the reverse value of the RSI is also moving. So at this point in time, for example, if we were to hit 50, 51, I think is the value, the precise value I'm tracking, that will correspond to this orange line. Let's make it the green one, 50, 51, like that. You can see here that that corresponds to 64.2. But 3 days
And that's where
ago,
we went yesterday. That's where we went Saturday.
yep. So that is achieved there, but I still think that this is currently doing a dead cat bounce. That's my perspective. Um, it's my bias. I might be wrong, but I feel like here is doing a dead cat bounce, and my final target is actually not final, but my next target is to get to 62, 63. This line here, just because it was resistance and then it became support, and not just any support, but look at this week going down there, grabbing the fair value gap liquidity, and then bouncing so strong from there. So I think that this could make another visit to 63. And my final and my almost like my Christmas wish is that Bitcoin goes now to 48. um, I can explain later into why 48, but my hope is that it's gonna get there. There are some technical pointing to that, but don't bet everything on that because it's a risky one. I think the most conservative target is that we can get to 63. That wouldn't require that much luck. But going to 48 is gonna be a tough one. Could happen. Yeah, there are factors indicating that we could get there, but it's definitely not guaranteed.
Yeah, that's a pretty cool tool. I like how you're able to apply that, and you just put in the values and it
Yeah,
calculates. That's
and
great.
this particular one, the one that I built it using bands, so you can put multiple values here. Typically, I put my bullish values at the top, so I say we're gonna go to 70, between 70 and 60, and if we are bearish, we're gonna go, let's say, from 40 to 30, and then I enable all of them, and you get kind of a range of what are your expectations. So maybe this could be your take profit area. So you could start getting rid of some around there, accumulating likely here, and accumulating like mental in the red area, and all of that, based on what you expect this RSI to go. Of course, we are in an uptrend. The trend is your friend. This could continue going higher. We just broke the momentum. That is 1 point against this uptrend, and I'm betting big on that coming now and resetting a little bit further. And sometimes it resets around here. Sometimes it can get to 30. We don't know that part yet, but so you can use those values depending on your expectations to then go back to the price and see what corresponds to what.
So you said your target, your dream target is what'd you say, 52?
So I got this chart here, and I think it's been so useful. This particular way of seeing the price. Of course, there are 100 billions of way of doing this, and sometimes I see some other people I respect on YouTube doing their own lines, and sometimes I like them more. But for me, this helped me a lot. And because we have this resistance, we turn it into support. From here we push up, and those lines are here from pretty much June 2023, and I haven't moved them. And the same with the order blocks that I drew in green. They're there as well. This was here before we did the all-time high. And now we are kind of building up this monthly week to the upside. We are at 18th of March, so there's still 2 weeks to go to confirm or discard whether this is just going to be one of these, or if it's going to push up straight away. So we have two teams. Are we going to conquer this in one hit, or are we going to conquer it in two hits? I think those are the highest likely options at the moment. So either we get rejected here and we find support somewhere else, and then we conquer it later in 100 days, in 200 days, or now is the day and the ETF demand is just too big and this is just going to break through this like butter. So far, it's not butter. So far, it's telling us to calm down a little bit. So my next level is around here. Just simple. Look at this. These movements have been extremely big. So it's not too much to ask that if there is a pullback, the pullback is somewhere here. And I know many people are going to say with the demand of the ETF, that's never going to happen. But well, let's see.
Never doesn't age well.
Let's see. Yeah,
Right?
yeah, yeah.
Straight lines aren't sustainable. Up only isn't a thing. Never, always, and guaranteed don't age well in trading.
Yeah. All right. So I want to look into some of the questions from the people and,
Sure.
and read some of the comments. I'm going to see if that's not going to show there. I'm just going to read them. TechnoGadget is asking, have you checked on the power law? Oh, that's an indicator that I think he was sharing with me on Twitter. Let me see if I can find it on Twitter. I'm gonna share the screen in just a second. I think I saw it somewhere. Or yes, it was this post. I'll share the screen now. Window this. All right. So he was sharing this. It's like a exponential, logarithmic. Maybe it's a log. I'm not fully sure. It's a log of the time and log of the price. For those of you that are mathematicians, you can probably say it better than me. But I remember from going to the lab and using these papers in the past. And this basically shows the tops, the bottoms, and it shows like a target. And it seems like the target is displayed with a star. And then once you are in the big red, you are very close to a top. And it looks quite like a very bullish chart to me, because it's kind of pointing towards over 100K. Interestingly, if you notice that top, if you follow the green where we are right now, that top is drawn slightly later. And for those of you that are new into Bitcoin, I'm sure that all of you probably know, but I want to make sure that everybody understands. There's a 4-year cycle. And in the 4-year cycle, there's the halving. There's 30 days now, more or less, left until the halving. And usually the all-time high comes right after that, because the halving just makes everything very bullish. So it's usually expected to see the all-time high after. So now we are pointing very high. We are above the purple line, and the typical performance of Bitcoin is that now there is some sort of cool down, and then you enter in the last final stage and you get there. So you can see that the yellow line above the purple is kind of scheduled for a little bit later. And of course, anything can break and play out in a different way. Like, for example, in the previous bull market, we didn't have a blow off top. I got tired of listening to people say the blow of top, the blow of top, the 150K, the 150K, the 150K. And the thing that people talk the most is the thing that doesn't happen. So don't get too used to the ETF, the ETF, the ETF. No, don't be part of the people that repeat like a parrot everything. Yeah, I'm the trading parrot, but do not do the parrot thing. Okay, you get my
bad,
point.
bad choice of words.
Don't repeat just the ETF, the ETF, the ETF. No, that's gonna get you burned just like the last time. What was this called? This model, the stock to flow model. I still remember being in love with the stock to flow model up until the time where the dude that came up with that model was saying, yeah, well, it didn't work out. Well, why it didn't work out? Well, there was COVID and the whole stupid bullish market shifted one step down and it destroyed temporarily the model.
Guess what? He's back, and he's right back on target. So, so, so,
Interesting.
so, I saw a post recently from him that shows his long-term chart, and it is exactly on target. At the 73K level, and then it has a top of market. I think maybe early to mid 2025 in the 150K range. So it works until it doesn't, and then when it works again, it's convenient to say it works again. So I mean, it's one more. Listen, whatever you use as a trader, I think that it is dangerous to rely on any single indicator, any single tool, any single person that you follow, that you may follow, ourselves included. I think that you need to take in and absorb all the data and information that you get. I think you need to limit the sources of information that you pull from, and quite honestly, um, what we call crypto Twitter ain't a great spot. I literally I engage with very few people outside my sphere there, not because I think I'm right, because I don't want to be influenced by there's a lot of noise, right? You have to sort through. The signal to noise ratio is not very good on Twitter. So you have to find the alpha, and then maybe gravitate towards and focus on the sources that you trust rather than everybody's narrative. And when people start bashing each other because someone was a bear or someone was a bull, it's stupid to me. There's no point, right? I'm not a bull. I'm not a bear. I'm a trader. I'm neutral. I look at what's in front of me. And every time I analyze a chart, I look at where price might go if it's going to move up, and I look where price might go if it's going to move down. And I may be positioned relative to that, on any given day. But I always want to know what could happen. What are the scenarios if price moves against my theory, my idea? And I think that that's how you protect yourself from getting destroyed. You got to know, you have to know that you're not going to get it right every time, and you have to know that if price does move against you, where are you going? Know what those moves are before it happens, so you're not forced to make that decision in the moment, because
Mhm.
that's where people get screwed. It's when they make that emotional decision in the moment. They're like, "Oh shit, what do I do? What do I do?" Make that
Yeah,
decision before you open the trade.
yeah, definitely. Keith, I have a last question for you. So we wrap the live stream in
Okay.
about 1 hour. This question is from Abdul, and it's a very fair question that probably everybody wants to hear your answer. Do you think we are in a bull market?
Okay, that's a very fair question. And I would say there are some components to that. No denying that this has been a and if I may share this screen again, no denying that this has been a bull trend. Now, I've been a guy that since the early days, okay, since the FTX crash, have said I think we're due for a pullback. I think it's a bear market rally. I think we're in a pullback. And we didn't really get any validation that it wasn't. I had some key levels that I was looking for in terms of breakouts. And, first it was the RSI and things got annihilated, right? So the technicals got annihilated. We had talked about that quite a bit. In my opinion, okay, whether you call this a bear market, a bull market or a bull rally, there's one thing that's clear: rejection after rejection on this prior top. Okay. We had a little bit of time up here, but each time, and I've been calling for this every day, until we see full candle bodies with no wicks. That included the weekly time frame as well. So we got one on the daily, but none on the weekly. Until we start printing candle bodies, full candle bodies with no wicks below, I don't think we can call this a breakout yet. Okay. So printing here, yes. Then it's undeniable. We have this long time trend. I think this would be a potential area for resistance trying to break back in here. And that 30-40% retest could happen. Whether you want to call this a bull market and say, yep, it's a bull market and we're getting that retest, at some point, I'm fine with that too. But in terms of this breakout, in my opinion, has been invalidated by this rejection and the constant rejection. So until we start seeing full candle bodies above here, that, in my opinion, would be a confirmed and validated, very difficult for anybody to dispute bull market.
Yeah. Well, the answer to that is usually a lagging answer because, of course, if we look at this from now that you're zooming out, it looks like a bull run, right? It looks very strong.
Right. You
The
can't deny the trend, right?
It's very difficult to say, well, that pullback is enough to now call it bear, but it's just uh, I think it's been, let's call it like that, it's been an amazing bull run, and now we are extremely overheated and is calling for some pullback, um, and at the timing that we are now pre-halving to do the all-time high, it will be the first time that it does it, if it does it. So you are taking a big bet. If you are out of the market to enter right now, it will be, for me, like a suicide. If you're holding and you decide to continue holding, I think that that is a good idea as well. But entering right now is suicide.
You mean starting fresh with a brand new position
Starting
from here?
fresh. Like many people come to me and say, "Oh, it's been running like crazy. Should I start buying now?" Like at 73. No, no, I'm not kidding. On Friday, I was in London and I was talking to my friends and they were telling me, "Should I buy now?" And I was like, "What?" But have you noticed that it's been just going up without stopping? That's not the
Yeah.
time to
So
buy.
right, these straight lines scare me. These consolidations, people hate crabbing, right? Sideways chop, crab, whatever. These are the strongest portions of the chart. So when price, if price continues down, it's it could bounce here, it could bounce up here, it could bounce here, it could bounce here. These are all viable targets, in my opinion. And I would love to see. I would love to see this move and then shoot back up, right?
Yeah.
So that would be something like I'd be fine with that. How about you?
Yeah.
And in terms of entering the market now, especially for new participants, it's really difficult to call. If they're asking you if now's the time to enter, they clearly don't know how to trade. And at that point, if you're going to enter, then you want to do something like a TWAP strategy where you're just, every week or every month you're adding a little bit to a position and you're just going to dollar cost average your way down and buy all the way down and be fine with that. Don't open with don't ape in right here. It's not what you want to do. But
Mm-mm.
if you go in incrementally and buy your way down, and what I try to do is kind of shape my entries in the form of a pyramid where my highest entries are typically the smallest, right? Or it may open with a portion that's relative to the previous sizes, but I'll sell the tops of it so that I'm shaping a pyramid where the smallest my highest entry is the smallest size, and my base entry is the largest size. So if you consider it that way, where you make maybe a small entry in this range, although like we've just discussed, we feel like price is going down. So maybe I would wait until after the FOMC meeting on Wednesday, which we haven't really talked about. And just real briefly, I would say that Chairman Powell telegraphs his intentions. He's not wanting to surprise or shock the market. And he has said repeatedly that they feel like we're on target for a total of 75 basis points cuts, 25, 0.25% each between now and the end of the year. And he testified before Congress and Senate a couple of weeks ago, and he was kind of dovish and on pace with that. Of course, keeping things very close, not making any commitment as to when it would happen. We've seen some new data since then, and they are obviously very data dependent. And so some of the data that has come in has been, how should I say, more on the hawkish side. So we'll have to see on Wednesday. I don't think anybody is expecting a rate cut on Wednesday. And I think that the market has already baked in these 75 basis points for the end of the year. The question is, does he still, or does the FOMC still feel like we're on pace to do 75 basis points this year? Or might they start walking that back a little bit?
Let's leave the question open and let's wrap it up for today. It's been really a pleasure. I had an amazing time in the live stream with you, Keith. I think we should do this again, but my opinion doesn't really count that much. I want to know what people think. And if you really want us to do this once a week, guys, and look at the perspective of different perspectives of Bitcoin and ping pong, many ideas, just make sure that you hit the like to the video or leave a comment in the video later whenever you have time. And we're going to count all the likes. And if we see that you actually enjoy it as much as we did doing it, we will do it next week. Also, if you want to leave a comment like, oh, do it at another time or do it another day, we are also going to consider your suggestions as well.
Yeah, and we'll also we're open to analyzing other coins too.
Yeah. Suggest some ideas. All right. Thanks so much, Keith, for having me.
Hey, thanks. I
For
enjoyed it,
coming
and
to the
thanks to
channel.
everyone for watching.
Take care. Cheers. Bye, guys.